The world of cryptocurrency is no stranger to surprises. Yet, recent actions by the German and US governments have sent ripples through the crypto sphere. Both have conducted significant transactions involving Bitcoin and Ethereum. These moves have left many wondering, are governments becoming crypto whales? Is this the start of a new era of digital asset adoption? The German government recently offloaded a significant amount of Bitcoin. This move was particularly interesting because it took place against the backdrop of new European Union crypto regulations. Meanwhile, the US government made headlines by moving a large sum of Ethereum. These funds were originally seized in connection with criminal activities. These actions highlight the growing involvement of governments in the crypto space. They also raise questions about the future of digital assets in a world increasingly shaped by regulation. The implications of these transactions extend far beyond simple profit and loss. They signal a shift in how governments view and interact with cryptocurrencies. Understanding these moves is crucial for anyone invested in or curious about the future of digital finance. The way governments choose to engage with crypto will likely have a profound impact on the market's trajectory. This is just the beginning of a fascinating and complex narrative. Germany's recent Bitcoin sale has sparked intense curiosity within the crypto community. The sale involved a substantial amount of Bitcoin, though the exact figure remains undisclosed. The government chose to liquidate these assets through the country's justice system, utilizing established auction platforms. This approach ensured transparency and allowed a wide range of bidders to participate. Several exchanges, including Bitcoin.de and Binance, reportedly handled portions of the sale. These platforms are known for their robust infrastructure and ability to handle large volume transactions. The choice of these established players underscores the German government's focus on conducting the sale in a regulated and secure environment. While the exact reasons behind the sale remain shrouded in speculation, several factors likely contributed to the decision. One prominent theory points to the German government's desire to distance itself from assets associated with illicit activities. The Bitcoin in question was likely seized in criminal investigations, and liquidating these holdings could be seen as a way to sever ties with their controversial origins. Additionally, the timing of the sale coincides with the implementation of the European Union's Markets in Crypto Assets (MiCA) regulation. This new regulatory framework aims to bring greater transparency and accountability to the crypto market. The Markets in Crypto Assets (MiCA) regulation marks a significant step in the European Union's approach to cryptocurrencies. This comprehensive framework aims to harmonize regulations across the bloc, providing much-needed clarity for businesses and investors operating in the crypto space. MiCA introduces licensing requirements for crypto service providers, mandates stricter anti-money laundering (AML) and Know Your Customer (KYC) checks, and establishes rules for stablecoins and other crypto assets. The implementation of MiCA has far-reaching implications for the crypto industry in Europe and beyond. For governments, MiCA provides a framework for regulating crypto assets and mitigating risks associated with money laundering and terrorist financing. The regulation's focus on transparency and accountability aligns with the German government's decision to liquidate its Bitcoin holdings through a public auction. By choosing established and regulated exchanges to handle the sale, the German government signaled its commitment to operating within the bounds of this new regulatory landscape. This move could be interpreted as a strategic decision to demonstrate compliance with MiCA and set a precedent for other governments navigating the complexities of crypto asset management. The German government's actions in light of MiCA underscore the growing importance of regulation in shaping the future of the crypto market. Across the Atlantic, the US government has also been making headlines with its crypto holdings. The US government, unlike Germany, decided to move a large sum of Ethereum. These funds were not auctioned off. Instead, they were transferred to different addresses. This move has generated significant interest, particularly because the Ethereum in question was originally seized by authorities. The funds originated from a case involving a darknet market. The platform facilitated the sale of illegal goods and services. Law enforcement agencies eventually shut down the operation and seized a vast amount of cryptocurrency, including the Ethereum that was recently transferred. The total value of the seized Ethereum is estimated to be hundreds of millions of dollars, making it one of the largest crypto seizures in history. The decision to move these funds, rather than liquidate them as the German government did, has fueled speculation. Some experts believe that the US government is consolidating its crypto holdings in preparation for future auctions. Others suggest that the move could be related to ongoing investigations or efforts to improve the security of the seized assets. The US government has not issued an official statement explaining the transfer. This silence has only intensified the intrigue surrounding its crypto strategy. Section 5. Market tremors and future predictions. Both the German and US government actions have sent ripples through the crypto market. The sale of Bitcoin by the German government, even though the exact amount is unknown, created some downward pressure on Bitcoin's price. This is not surprising. Large-scale sales often impact asset prices. The market, however, absorbed the sale relatively well. This suggests that the market is mature enough to handle such events. On the other hand, the US government's decision to move its Ethereum stash had a less noticeable impact on the price of Ethereum. This could be because the funds were not sold on the open market. Instead, they were transferred to different addresses. This suggests that the government, for now, is not looking to liquidate these assets. These events offer valuable insights into how large-scale government actions can affect the crypto market. They also highlight the market's growing resilience. As governments become more involved in the crypto space, we can expect to see more such moves in the future. Understanding the potential impact of these actions is crucial for making informed investment decisions. Section 6. The power of precedent. The recent actions of the German and US governments are not just isolated incidents. They represent a significant shift in how governments view and interact with cryptocurrencies. By taking these actions, both governments have set important precedents that could have far-reaching consequences. The German government's decision to sell its Bitcoin through a public auction, for example, demonstrates a commitment to transparency and accountability. This move could encourage other governments to follow suit, leading to a more regulated and transparent crypto market. The US government's decision to hold on to its seized Ethereum, on the other hand, raises questions about the government's long-term strategy for dealing with crypto assets. This move suggests that governments are still figuring out how to navigate the legal and logistical challenges posed by cryptocurrencies. Section 7. A new era of crypto regulation. These recent events coincide with a broader trend of increased regulation in the crypto space. The European Union's MiCA regulation and the United States' ongoing efforts to develop a comprehensive regulatory framework for digital assets are prime examples of this trend. Increased regulation is often met with resistance from some members of the crypto community. However, it is crucial to remember that regulation is essential for the long-term health and stability of any market, including the crypto market. Regulation can help to prevent illegal activities, protect investors, and foster innovation. By working together, governments and the crypto industry can create a more robust and trustworthy ecosystem for everyone. Section 8. The future landscape. The future of cryptocurrencies is uncertain, but one thing is clear. Governments will play a major role in shaping this future. Whether it is through regulation, enforcement, or their own investments, governments are becoming increasingly influential actors in the crypto space. It is important for anyone involved in or interested in the crypto market to pay close attention to these developments. The way governments choose to engage with crypto will have a profound impact on the market's trajectory. The recent actions of the German and US governments are just the beginning of a fascinating and complex narrative. As the crypto market continues to evolve, we can expect to see even more unexpected twists and turns.